Realistically, that's, a half-inch CDX 5-ply should sell for around $20 a sheet. Right now, it's being sold for $58 a sheet.
The feds are saying they plan to keep rates low for 2 to 3 years up until 2024.
When they say that they're going to do something, it's all to get the markets to react to those words.
You're printing, they said, I think 20% of the entire US dollar in just 2020. And are people running to gold, running to Bitcoin? Are they trying to hedge against this?
I don't look at it as something that I want to have go up in value, because if it's going up in value, that means you have a deterioration of the system.
Is there going to be a housing crash?
It's going to be hard to see a crash when everybody sees it coming. Crashes come when they're least expected.
What's going on, everybody? I hope you're all having a great day today. In this video, I have a very special guest with me known as Uneducated Economist, but in my opinion, he's very educated. And in this video, we're talking about the hot topics that everybody is wondering about. The housing crisis. Is there going to be a housing crash? Interest rates, gold and silver, and Bitcoin. And on top of all that, are we seeing inflation, deflation? What is going on? So in this video, we got Simon with me, where everybody's been telling me to collab with him, make a video with him, because they're loving his content. And guys, we got him with us right now. Welcome, Simon, aka Uneducated Economist. How are you doing today?
Doing excellent. Thanks for having me on today, brother.
That is awesome. So before we jump right into it, I got two things that I'm going to ask for everybody who's watching. Number one, hit the like button. What that's going to do is push this video to people who like this content like you. And number two, I officially launched my Discord. We talk real estate, money, and business in there every single day. Link is in my description. You can jump in it. And most importantly, let's see if Uneducated Economist jumps in and he joins our Discord. But with that being said, Simon, I want you to tell me 30 seconds to a minute. Who are you? What do you do? And how did you get on YouTube, explode your channel, and make the successes you have now and the following that you got?
Yeah. Well, my name is Simon. I call myself the Uneducated Economist. About 3 years ago, November of 2017, I started my YouTube channel. Now, a few years before that, I had been working in the construction industry, tried buying a house back in '07, and when everything started turning and going down, I lost everything I had and went out there to try and figure out what was going on. So I fired up Google, started punching in mortgage-backed securities, credit default swaps, and just never stopped asking questions. And when I talk to people about economics and kind of what's going on, they find that I can really interpret things that are very complicated and bring it to them in a very understandable way so that everybody can have a conversation on it. And people really love my analysis that I do for different current events that are taking place. I've been working in the lumber supply, building supply industry for pretty much my entire life. I got a job when I was 18 years old working at a hardware store, and outside of doing a few years of construction, this is what I've done my whole life, is have my fingers on the pulse of the building supply industry, bringing that kind of knowledge to the macroeconomics. People really enjoy the perspectives that I have. So
that's awesome. So right now you're basically in the industry that everything revolves around in the housing market, especially for new construction. So you're actually seeing firsthand the prices that are happening and the shifts that are happening. So that's huge value, because I'm a real estate agent. I'm going to deals where I'm closing with clients on new construction, yet we're getting new construction that was once $600,000 now becoming $700,000, $750,000, just because the lumber cost, just because they're brick back order, just because they have such high demand that they can just do that. So that's something that we're dealing with right now. So we're diving right into it. I appreciate you giving me the intro. My question to you that starts off is, what do you see happening to new construction development in the short term and long term in regards to the lumber costs, regards to materials and stuff? What's going on the back end?
yeah, well, it's really difficult to try and foresee what's going to happen here into the future, because the answer to high prices is high prices, and man, do we have some high prices right now. And people are really having a lot of sticker shock right now. They come in, and really it's two items that I really track: 2x4/8 standard and better and half-inch CDX plywood. These are like the two most common pieces of building supply material that you would ever find on a job site. Okay. So keeping your eye on these two particular items is really going to be telling of where the industry is headed to. And to kind of give you an idea, I used to sell 2x4/8 standard and better. Back in the day, I used to sell them really cheap. But even just recently, like within the last couple of years, I remember selling 2x4s for around $2.50, 86 cents would be kind of typical, you know, two and a half to $3. Right now we're selling lumber or 2x4 lumber at $8.55. It's
No
just far
way.
exceeding anything that we had ever imagined we would ever sell a 2x4 for. And then half-inch CDX, it's just as crazy. Like I remember selling CDX at the low, like I remember selling it down around $16. But really, realistically, that's, you know, a half-inch CDX 5-ply should sell for around $20 a sheet. Right now, it's being sold for $58 a sheet. It's just like, it's so
Oh,
extremely out of whack that, you know, the idea that people are building right now is just mind-blowing, that they would be willing to put that kind of money forward to frame a house with prices at the elevation that they are.
so you're saying CDX, right? Can you explain what that is? Two by four.
Yeah. Yeah, CDX. So like, okay, so when you're framing a house, you have like the 2x4s, 2x6s. This is like the skeleton of your house. Then you have the skin that goes on the outside. That's referred to as the sheathing. This is before all the doors, window siding, stuff like that goes on. So it's a very critical component to the framing aspect of things. And you know, you could look at a million houses out there and they'll have different windows, different sidings, different roofings, but the framing is all the same. It's the same 2x4s, it's the same half-inch
Yeah.
CDX or 7/16 OSB. A lot of builders use, which is a similar product to half-inch CDX, just that it's made more of like a composite material with a bunch of chips. But anyway, those are like the two critical components to framing or building a structure. After that, it's all like different types, you know, different types of siding, different types of
Yeah.
windows. But those are the critical components.
Now here's the thing. Now you have new builders who are coming into the industry and also old builders, developers coming in. They're making orders for the lumber, they're making order for this material. And what's happening is they're building 50 homes, 100 homes, even 1,000 homes at this cost of material. Let's say it's going to take them a year, 2 years to develop that community. What happens when lumber prices go back to normal or dip? They're going to be now competing with people who are building across the street from them at a lot cheaper rates because they got the lumber at a cheaper rate. Are you seeing that to be an actual factor, or do we not have to, are we not seeing that to be something that's going to happen?
Not yet.
Uh,
Not yet, because we haven't seen the prices drop yet.
Now, if
So
they do drop, are those builders in trouble because they want the premium price because they paid a premium?
that's right. You know, so that's where you're going to be stuck. Like if you can imagine that you have purchased your framing package to frame, you know, your house up at $58 a sheet CDX, but now you're competing with somebody who's buying it at $25 a sheet. I mean, think about how much more that they can drop the margin on that house, you know, considering how much cheaper that they were able to, you know, buy that material for.
Got it. Okay.
I don't know exactly how, because I mean, it would depend on how quickly the material dropped. I mean, if it goes from $58 a sheet down to 55, that's not going to be a really big deal. But if it goes from $58 a sheet back to normal, where it's like at $20 a sheet, that's going to be very devastating. And I just don't see something like that quite taking place. We're rolling into the building season. There's going to be a high demand for it. You know, inventory levels are still low on the houses, so people are, you know, demanding the projects to be done. What concerns me the most about it is that I look more at the retail end of things, right? Because, you know, sure, the builders are out there, you know, buying the material, but there's a lot more to the building materials than just the builders. You know, there's retail end of things. People are building, you know, little sheds or shelves, or, you know, building the tree fort for the kids or a chicken coop. Although these are tiny, small projects, you got to think that there's thousands and thousands and thousands of projects like these out in every single town that are no longer demanding that material because it's just so expensive. So
Yeah.
there's a huge drop in demand on this material. So how fast it can move, who knows? I mean, there's a lot of things getting, you know, coming into play as far as where that demand is going to be for this material going into the future. But ultimately, the question that you're asking, are the builders in trouble from buying at this price? Yes, they could be if the price drops dramatically. You know.
Okay, that makes sense 100% because we're seeing right now. I went to a new build meeting about last week, and the builders are now having the buyers bidding on the property, the land and the new build. And what they're saying is, we're not putting a price tag. Just tell us what you want to pay, highest and best by Friday, and we'll develop for that one person. So it's become ridiculous, especially in markets like Dallas, Fort Worth, where land is not really there. There's not much land, and in good areas, it's already developed. So it's a lot different, and what's happening with the lumber costs is causing a lot of that. Now, we're seeing right now the market explode from two reasons. Number one, supply is very, very low, which in basic economics, like you as an economist, right, you would call yourself uneducated economist. But in economy, if you got low supply, high demand, you ultimately have prices go higher. So right now we have low supply in housing. And then on top of that, we have very low interest rates, which are causing people to go crazy, wanting to lock in that rate. Do you see interest rates pivoting within the next couple of years, 1%, 2% higher? Do you see them staying flatline like they are now? Do you see them going lower? What's your take on that?
It's hard to say. I personally think that we're going to start seeing interest rates going up. One of the major concerns, and I know that it's hard to try and imagine what the Federal Reserve is going to do, because nobody knows. Nobody can predict, some of the ideas and games and tools and stuff like that these guys come up with. But a lot of people, like, especially on my channel, I hear it a lot. It's like, the Fed is going to destroy the dollar. We're going to go, they're going to take interest rates to zero, go negative, print into oblivion, whatever. I personally don't think that a private central banking institution is going to purposely destroy themselves.
Yeah.
Like, I just don't see that they would make decisions that would do that. Now,
they have so many people that can show them where things would head if they were to do that. So I doubt that they would know the negativity and still do it.
Exactly. And so I just try and imagine it's just like, okay, so the Federal Reserve is not going to destroy things on purpose, I would just assume. Now, they also need, and they've mentioned this many times, that they need a functioning housing mortgage market in order to have an operating monetary policy. So keeping the housing market functioning is absolutely critical to their monetary policy as well. So now you don't really hear them talking about it, but I've heard them state this before. So they definitely don't want to see a crash in the housing market.
Yeah.
But they also don't want to see a blow off top, which is what we're experiencing and what Canada is going to go through here in any time now. So in my opinion, the Federal Reserve is going to do their best to try and allow interest rates on mortgages to continue to go up. Like if they allow the 10-year, like, because everything tracks the 10-year. So if the 10-year can go up, then that'll drag mortgages, mortgage interest rates up and hopefully start cooling off the market. But at this time, it doesn't seem like anything's cooling off. It just seems to be getting hotter. So
that makes sense 100%. I know that the feds are saying they plan to keep rates low for 2 to 3 years up until 2024. Is that just talk, and you think they can just show up the next day and say, never mind, change of mind? Or is that something that they would need to stick by?
To be honest with you, everything the Federal Reserve says is a credible threat to get the markets to react to their words. And this is something that I've said in past videos before, is that it really comes back down to a Ben Bernanke speech from, I want to say it was like 2001. And he was talking about how when the Federal Reserve hits the lower bound, when they hit the lower interest rates at zero and they're no longer able to drop interest rates to stimulate the economy, but he said that that was going to be okay and that they would have other tools they can use. One of the tools that they can use is job owning or their words or something like that. And the way he related it down to was that a guy invents a gold machine. With this gold machine, he can produce as much gold at will with very little energy or cost. The moment that this information gets out to the markets, the price of gold would plummet. Even before the guy produces a single ounce of gold, just the credible threat alone that this guy has this machine would change the market's perception. Yeah. That's the credible threats. That's what the Federal Reserve uses on a regular basis now. And that's their main tool. So when they say that they're going to do something, it's all to get the markets to react to those words.
That's crazy. And I'm with that 100%. I see that happening. We see that happen in many aspects and in the industries and many industries. Now, for those that might not know, I want you to give just a quick example. Why do interest rates go low and why do interest rates go high? What's the reason in a certain economy? Why do they just decide, let's make it lower? And another economy, they say, hey, let's make it higher.
Well, I guess that would adjust on how much spending and debt was being taken out. Is if people are out there spending, they're out there, they're working, they're getting an income, they're out there, buying cars, buying houses, doing whatever. Well, then everything's running fine. In fact, if it happens too much, then they have to start raising the interest rates to cool that down, to keep things from just getting too fast. Things all of a sudden start going, start heating up to the point where you get like the housing market and things start getting too hot, and all of a sudden you have $350,000 homes selling for $500,000, things that just don't make sense anymore.
Yeah.
Well, that's because the interest rates are so low. And when you recognize that, then you raise the interest rates to kind of stifle that kind of attitude towards things. It's hard to understand it in a macro view when you got this whole giant economy and you got so many people hurting, needing help, and then you got this other group of people who are doing extremely well.
Yeah.
And you think, okay, well, if we try and deal with the people who are doing extremely well, that's really going to damage the people who are doing really bad. But they're not really, in a condition in which that interest rates are going to affect them that bad. It's just the amount of help that they get from the people who are doing really well diminishes. So you kind of have to take care of the people who do really well so they can take care of the people who don't. And that starts turning into a whole political, thing,
Okay, that makes sense. And I love how you said it. That was real simple of why it goes low, why it goes high. The low rates to stimulate the economy, higher rates to balance off and cool the economy, and simple. So I like how you said that. What's your take on people saying that we had over $5 trillion printed in 2020/2021 with all these stimulus packages? Now, I know, and I'm not a genius on this, I'm just a real estate agent who does investments, and that's all I know. But I know basics that if you're printing $5 trillion, there has to be some type of reaction to that, a negative reaction to that, because you're printing, they said, I think 20% of the entire US dollar in just 2020. So are we seeing deflation, inflation? Are people running to gold, running to Bitcoin? Are they trying to hedge against this? What's your take on all of that?
Mm-hmm. Yeah, that's the big argument. Everybody looks at the quantitative easings and they say, man, that's going to be some inflationary pressure. Definitely going to have inflation coming into the future on account of all this money printing. But it's difficult to kind of wrap your head around why this would actually be a deflationary event, considering that there's mass amounts of money being printed. And the reason is again, it's the interest rates. It's the reason they're so low. And kind of the easiest way for me to understand it, and the way I kind of explain it to people, is if you could imagine higher interest rates back in the early 80s. Let's just say for some reason you win the lottery or you inherit or whatever, you come across $1 million, right? You have $1 million, you're living in the early 80s. You take that $1 million, you buy 10-year treasuries with it, and you would have a pretty decent return for the rest of your life, considering you would get like 150 grand a year, right? You can go and spend that into the economy, go on vacation, buy houses, cars, hang out.
Yeah.
Well, now you inherit $1 million, you go and put it in 10-year treasuries, and you're going to get like $12,000 a year. I mean, that's like, you're not going to go out and spend and have fun and enjoy life. That's going to be like nothing. In fact, you might as well not even try.
Makes sense.
So you can understand like how higher interest rates actually was better for the economy when you had like a return on your capital by just that simple kind of understanding, taking $1 million and putting it towards 10 years treasuries. Now, everybody was really excited as the interest rates were dropping, because if you were invested in bonds, then the bonds were gaining value. As interest rates drop, you could sell your bonds for a profit. So bond market was just like this awesome thing for the last 40 years. But now we're here at zero and things are really difficult. What ends up happening is that the Federal Reserve, when they create this money and they inject it into the system, they don't just inject it into the system like, here's a bunch of cash for everybody to go play with. They have to buy things into the system, and most of that is loaning it through like mortgage-backed securities or the purchases of treasuries and stuff like that. So this lending into the system is not really just like throwing money out there for everybody to just go play with. That money has to come back to the Federal Reserve plus an interest rate. So when you consider that the return on capital is so low, the money velocity that is moving right now is very sluggish. So that velocity not picking up and being so sluggish on account of the way that the Federal Reserve has printed up this money and injected it in really isn't going to cause the inflation that people would anticipate they would see on account of all the money printing, because the velocity is so low.
Makes sense. I got you. That makes sense 100%.
Does it? I don't know. I mean, sometimes I think I babble too much,
No, it makes sense. I got you 100%. Now, what's up with gold? I mean, we're seeing that gold prices, ever since the pandemic, they've skyrocketed. Now, we're seeing them kind of taking some dips here and there, but ultimately, people are like, I got $5 million in the bank. We think that inflation is going to happen with the $5 million. Might as well go either buy real estate with it so the asset can appreciate. Might as well buy gold with it. Others are saying, let's pick up some Bitcoin because it might be the online gold. but all that's for a different discussion. What's your take on the money that you have in the bank and what you should do with it rather than just staring at it? Should it be invested because inflation might come?
I guess probably the easiest way for me to understand the gold market or precious metals is I don't think about like inflation on whether or not it's going to come. Inflation is already here. Like the definition of inflation is the expansion of money and credit. This has already happened. I mean, to argue on whether or not there's inflation, that's not an argument anymore. I mean, it's like the inflation is already here. So I guess like, I'm sorry, I kind of lost. What was your question again?
You're basically saying that it's already a fact that you're saying that already inflation is
Oh, right. On how to deal with it. Right. And so like, buy, like a lot of people will look at like, okay, so we have this inflation, you go and buy gold as a hedge against inflation, because as this money pours into the system, then it'll cause like, the gold price to go up. The idea behind that is like you're going to sell it to the greater fool. I mean, that's the same way I feel about Bitcoin as well. And a lot of people get mad when I say that, but that's ultimately what it is. I mean, it doesn't have a return on it. It doesn't pay you rent. It doesn't have a dividend. It's just an item that you go and buy. But the idea that it is like limited in an amount. So like there's only a finite amount of it. And when they print up as much money and get that into the system and you compare it to how much you have, there's really just not that much out there.
Okay.
So what I look at it is an insurance policy. I don't look at it as something that I want to have go up in value, because if it's going up in value, that means you have a deterioration of the system. So if you really want gold and silver to do really well, that means you want the rest of the world to be in crisis, which, what good is that?
Yeah.
So really it's an insurance policy. What I look at silver and gold as is like, if the banking system collapses, if, all of a sudden, like I don't have access to a job or income or something like that, then I have this box of metal. Like I've used it to buy a car when I didn't have a car. I opened it up, pulled out a few tubes. A guy signed a title over to me. I thought, holy moly, that is so cool. So I don't look at it as like my inflation hedge. I just look at it as like just an insurance policy kind of thing, because really, if you look at it as like an insurance hedge, or I mean, an insurance hedge against inflation, then we should have had this happen like 12 years ago. I mean, the Fed has been printing up like money like crazy. And to think that, all of a sudden now that it's going to make a difference, I don't see where that's going to take place. But to find that there's going to be like a collapse of the banking system at some point, well, yeah, that's definitely possible. I mean, that's happened many times throughout history, but the box of silver will always remain. It's always the same.
That makes sense 100%. Now, we got that one taken care of, but here's really the most important thing that we're really dealing with right now, at least for me in my industry, which relates to your industry, is a housing crisis where prices are it's honestly ridiculous. And the easiest way for me to say it is it's very stupid. I'm meeting with a client. The house is for $350K. We offer $400K. We waive appraisals. We waive inspections. We waive anything that has to do with the seller to be worried, paying $50K over the price, yet we're still losing because somebody else is coming in doing higher than that. Now, is there going to be a housing crash? Are we in a housing bubble? Are prices just going to keep skyrocketing? Will they cool down? Some people say a crash like 2008, 50%, 60%, some people say. Me personally, the way I see it is a crash is not necessarily that much, but you can say a 10%, 20% decline can put many home buyers underwater already because they've overpaid so much. So what's your take on the housing market? Could you see a crash happening, or do you just see a retrace in values and it just cooling down if the rates went up, if supply started to go up?
It's going to be hard to see a crash when everybody sees it coming. If everybody says that there's a crash coming, then there won't be one. It's just because people would, crashes come when they're least expected.
Yeah.
And so, I thought about the moratorium endings, because they got a lot of moratorium stuff. I think you did a recent video, an excellent video, I thought, on it too, where you really broke down all the different ones. And, I think about that. And if everybody anticipates that coming, then they're going to deal with it as it comes. And it's really going to be more of a shocker to the system that's going to cause a housing market crash, in my opinion. And so, like, I just recently kind of did a video just making a suggestion. A lot of my videos are really questions out there for people to answer. Like a lot of times, sometimes I even kind of get into the realms of outlandish, but really the comments that I get from it are real well worth it because I get this kind of collective view going. But one of the things I kind of thought about just recently as far as like what could cause a market crash, and that is that credible threat coming from the Federal Reserve. If they were to change that thought, that like, you know, that perception that they have put out there for the investors to feed on, then it can really change what can happen out there in the mortgage markets and in the housing industry. And one of the things that I'm seeing right now, and maybe you know a little bit more about this being in the industry yourself, is the amount of mortgage-backed securities that are being issued or being created right now. And I can only assume with the drop in sales of homes, because there's just simply not enough of them out there, the inventory, and then the drop in refinancing, it would lead me to believe that there must be a drop in the available mortgage-backed securities out there as well. Now, this is going to do something very interesting to the Federal Reserve because they are set at $40 billion a month. So the Federal Reserve, they're kind of sitting in a situation where they have to purchase these $40 billion a month of mortgage-backed securities. But at the same time, if you think about it, with the lack of sales and then the lack of refinancing, that should be diminishing the amount of mortgage-backed securities out there. But yet the Federal Reserve is still buying in at $40 billion a month. Well, they're already sitting on like a third of all mortgage-backed securities. Now, if this kind of event takes place and continues, they would probably end up sitting on a lot more of these mortgage-backed securities. This is a problem because if they are the buyer of these mortgage-backed securities, what they are doing is they're creating value for it that shouldn't be there because they are a printing press. They're not the actual market. And when they have a value for that, that causes the interest rates to come down. That's why everybody is out there able to buy these, you know, super expensive homes and pay an exorbitant amount for it. It's because those interest rates are low on the account of the Federal Reserve's purchases of those mortgage-backed securities. So now the Federal Reserve is sitting here thinking, in my opinion, I don't know if this is what they're doing, but I would assume that they are thinking, it's just like, okay, great. Now we have even more that we are purchasing out of the mortgage-backed security markets because of the lack of available, you know, mortgages out there being, you know, securitized. They are going to have to back out. And once they do that, once they say, okay, guys, we're going to change it from 40 billion a month to say 20 billion a month, the whole market's going to go, oh my gosh, the Federal Reserve is changing stance. We got to get out.
Yeah.
Right. And then that's going to cause people to like, I don't want these mortgage-backed securities. And it's going to have the exact opposite effect. And the price of those mortgage-backed securities will go down. The interest rates will go up. And then everybody's going to be like, well, I guess I can't buy your expensive home anymore.
Yeah. You know, what I see is, I love how you said that. What I see is that we're having this eviction moratorium. I mean, 2 days before it was supposed to be just the deadline hit, they go and extend it. Then you have the foreclosure moratoriums. Then you have the mortgage forbearance. In the clear words, this says that they're just trying to delay the reaction that they assume that they're going to be getting. I mean, they said that there's over 10 million people behind on their mortgage payments, over 12 million renters who haven't made their rent payments, over 20 million that are in potential default, that have a threat to being evicted, landlords not collecting their rent for over a year, the mom and pops landlords that are not getting the stimulus package help. And ultimately they're probably like, screw this. Once this tenant gets out, I'm selling the house. I'm not going to deal with renting anymore. And, you know, me personally, on the properties that I own, the leases that I'm doing is 3-month leases. I'm not even doing a 1-year term anymore. And the reason for that is, what if they don't pay? By law, I at least have a 3-month lease where they legally have to be out rather than me having to evict them because they're not paying rent. So the shift that's happening in the market is, you know, it's sketchy in my opinion on what's happening. I see a lot of delays happening. I personally believe that there's going to be a catalyst. I don't know what, that's going to cause something to cause the markets to come down. I don't know if it's going to be from the housing market in specific, but we've heard a long time ago that student loans are going to cause a crash. So I'm assuming not that, but I'm assuming a catalyst, something around the lines that's very big, could cause a crash, could cause at least a retrace, which a retrace might look like a crash to people, because if the market goes down 20, 30%, that's the true value of the home. But for others, they're going to think it's a crash that's happening. The true values is 300K, but you guys paid 400K. And that's why when it goes down 20, 30% back to its 300K, I feel people will assume a crash is happening. So that's kind of how I see things. From your perspective on the markets in general, because what we're going to do right now is wrap up our convo. Your perspective on the markets in whole, how do you see things playing out, not just in the housing market, but in general? We're still in the pandemic. There are shots being given out. Do you see things going back to normal in 6 months and a year? Do you see a reaction that's hefty that can cause some danger? What are you foreseeing? Just, this is not saying that you're guaranteeing it, but what do you feel a prediction coming from you?
Yeah, I feel that you're probably going to continue to see, like, the stock market do well. The housing market is very questionable, especially, considering, a lot of the things that we have talked about. So if the housing market changes, that's going to start dragging the rest of the markets around with it as well. So it's going to be difficult to understand, what's going to be taking place. Now, as far as I can see, what's going to take place, I don't think that we're going to have this wave of foreclosures and, evictions and stuff like that. What I think is going to take place is that we're probably going to end up having a government transition to some sort of like UBI kind of helicopter money thing taking place. And like already you can kind of see it take, like, come, what is it, June or July, you have this extended child tax credit. And so people are going to be getting checks in the mail here, and it's going to be over the course of a few months. A lot of people don't even know they're getting that. And it's going to be like, these pennies from heaven almost coming in for these people, and they're going to get used to this. That perception is going to end up being the norm, and they're going to have to do something as far as like the government's injection of money to the system in order to keep the velocity going. That's if we continue on with, like, the game plan, that the way it's headed. Like, if you want to keep the housing market going, you want to keep the stock market going, you want to go do all these things, that's what's going to have to take place. There's going to have to be continuous injection of money into the system in order to keep things going. Now, if they really want to work it and make it right, then you have to have the crash. You have to burn out all the bad debt. You have to get rid of all the malinvestments and stuff out there. And that pain is so dramatic to people that they will not tolerate it. They will not vote for people to do it. They will blame every single politician and banker out there. And so to think that that's what's going to happen, it's a far off dream. What they're going to do is they're going to try and alleviate as much of that pain as possible. And that's how they're most likely going to do it, is with monthly injections. Now, how far down the road that goes, I don't know. But
how far along they can keep doing it is what you mean.
Keep doing it.
Me personally, in 2020, after the pandemic, within a couple of months, I was a heavy shorter in the stock market. And I don't know, I mean, if you come to me and talk to me stocks, I don't know much about it. It's not my game. It's not my industry. But if I have some money on the side, I'll toss it in. So I was shorting a lot of the stocks, because it made no sense how a stock can file for Q1, Q2, Q3 negative in the billions, such as the airlines, yet somehow they go up in value or go up in price. So I was shorting a lot of these stocks, and I was losing every time I was shorting them, because you'd wake up one day and it's up now $5-10 on the stock. And you're like, how the hell is that happening? So long-term, I was shorting a lot of the stuff, even the SPY index, I was shorting those as well. And it's at $400. It just passed, I think, yesterday. And when I was jumping in it, it was at like 320, 350, maybe 360. And then it just started to fluctuate. So I don't know. The markets are weird. I feel like it's very tough if you're trying to predict what's going to happen. I feel what we try to do is grab facts, grab stats, share what we know and what we see. And, even though your name is saying Uneducated Economist, you're actually educating the hell out of the viewers that you have, because you're giving them so much value, and you're not just speaking what you think, you're speaking stats. Lumber prices are going up, period. You just shared with me numbers. You shared with me how they tripled, quadrupled. That's value, that's knowledge that you have. So, coming from me personally, I appreciate you being on the channel, taking your time, and you're amazing on what you do. And like I said, the dices in your car, that's like your symbol. So maybe I send you some nicer dices and I get those on there as well. I know your viewers love that. What we had today was, between me and you, and then we're going to also publicize this as an amazing chat. I got so much value. I learned so much. And I wanted to bring you on the channel, not just to hear your perspective. I wanted to learn from you, because you're in a different industry, and also you have interest into economy, interest into that type of stuff that I don't have enough time to read on, because I'm doing the real estate world. You like that, you enjoy it, you dig deep into it. So I appreciate that. We're going to get a lot of comments of people liking you, commenting about you. You're going to get those negative people as well. You're going to get some people who talk about whatever, but ultimately this brought value to the channel, and I appreciate you for swinging by, spending your time and doing what you do. Do you have any last words for everybody who's watching?
I thank you very much, and I just really enjoy talking economics with people. I want to just bring the attention out there for people to understand, and it's not as complicated as a lot of people have taken it to believe. We can break this stuff down. We can talk about it.
I love it. That is awesome. Guys, if you're watching this video right now and you stuck through to all of this, make sure you hit the like button. Make sure that you go to Uneducated Economist, aka Simon's channel. It's going to be linked in the description. Click the subscribe button. Stay up to date with him. He gives different perspectives, different point of views of things that it's not you should know, it's you need to know, because that's what's happening in the world. If you know what's happening in the world, you'll get your money right, your mind right, and you'll make more money. If you don't, you're going to get slapped and you're going to get off guard and you're going to lose money. You don't want that. Subscribe to his channel. And most importantly, guys, if you're on my channel and you haven't subscribed yet, I don't know what to tell you guys. Just click that button. And most importantly, come on the Discord. It's in the link below in the description. Join us, chat with us, and thank you all so much for watching. We'll see you all later. Thank you so much, Simon. You're awesome, man, and we'll be in touch on part 2. Thank you, guys. Take it easy, and we're out. Bye-bye.